So here the recording begins. Oh, okay. If you do trading, you probably will encounter a lot of technical analysis chat. Among these chats, KDJ signal and MACD signal are fairly common. But so when you encounter KDJ and MACD, so their formula, the way they construct the signal is pretty convoluted. You have no clue what is the intuition behind these signals. So today I'm going to show you these physical intuition, the physical analogy to KDJ and MACD. What are they, physically speaking? And based on this physical understanding, I'm pretty sure you will have a much more solid understanding of these price momentum and price dynamics. When you, after this understanding, you will know immediately when you saw a KDJ or MACD, you know what does this correspond to. And I can already tell you KDJ is the speed of the price, and MACD is all about acceleration, the derivative of the speed. How is that possible? Allow me to explain in this video. And based on this understanding, I'm pretty sure you're getting a better trading skills and possibly make more money with this solid understanding. So indulge me explaining all these concepts. First, I might give you a short review of physics. Let's briefly recap these concepts. So, yeah, I have three documents opened on this topic. I will choose one. So firstly, derivative arise in the study of motion. I'm sure you already know the velocity of a car is the rate of the change of displacement as a specific point of time. Well, you have, if you know differentiation and you know the basically it's take derivative of the total route or take total distance you have traveled, that will be your velocity. You take derivative with respect to velocity, that there will be a second derivative, then you get the acceleration. But we can further explain with we can we can take a example from a concrete function. So here it gave an example of, well, fx equals 10 times x to the power of 4, and they take a derivative, but of course it's you can definitely calculate yourself. If you don't know, go to Wolfram Alpha or ask ChatGPT. This is simple derivation, differentiate rules, and this notation is all about second derivative, which is you take derivative based on a derivative itself. If you take a derivatives first order derivative, then the notation will be f prime or y prime, depending on how you want to write or denote. If you take a second derivative, it will be f double prime or y double prime. Okay, here is more about math so far. So, okay, but let's go back to physics. So velocity and acceleration. Basically, velocity, you can think of this as a rate of change. It's all about rate of change, actually. The rate of change for your travel distance, if you think about it, what cost you to travel for a total amount of difference? What costs you to travel further is actually your velocity, right? If your velocity is zero, then it's doing you no good. You are not moving at all. If you have a positive velocity, of course, you are moving further forward. If you have a negative one, then you are moving backwards. It seems awkward that you have a negative velocity, but it's a physical convenience. They establish a positive direction, then you have a negative direction. In actual case, it may be moving north, that is positive velocity, and while versus moving south is a negative velocity, which is seems plausible, right? So here it says, okay, suppose you have st, that is a distance you have traveled. Rate of change of this s will be vt, that is the velocity. Rate of change, rate of change of rate of change of st, or rate of change of velocity, that will be acceleration. While here he is pretty strict that the absolute value of this velocity is called speed. But I do not fully agree. In some physics textbook, you'll see just rate of change of this like a rate of change of this distance could be a speed, and speed could be positive or negative. Here it uses a different definition. He thinks that, oh, speed couldn't be negative. It actually can. Well, he's more, yeah, here are some more elaborations. Vt equals s prime t, and the acceleration of a, which is abbreviation for acceleration. At equals v prime t. In Leibniz notation, v equals ds divided by dt, which is basically the same as s prime. And yeah, moving on a straight line, it's actually not necessarily, because in math you can have vector notation. Also, you can have a vector-based calculus establish these vectors. So you can also have vector-based acceleration and velocity. All are fine. It's just probably this text is geared towards like the first year college student. So they make it simple deliberately. Here are some more examples, I think. Analyzing motion along the horizontal line. Let's just go through one examples. So here the position is st, and you have conveniently you have the st equals t squared minus 10t. The time is restricted within 12 seconds. The unit of s is in meters. Sorry, like American audiences. Yeah, let's do some calculations. The velocity, they basically you take a derivative, you'll quickly get 2t minus 10. And the acceleration, you do a double differentiation, you'll quickly get 2. That means it's a constant acceleration movement at a constant of 2. The acceleration is always 2, is 2. I don't know how to say this unit in English, probably 2 meters per second squared, not sure. Constant increasing. This positive acceleration means that this fucking object is constantly increasing its speed. So if you see the diagram here, although the speed initially was negative, meaning it's moving towards a negative direction, but with time increases and because of this positive acceleration, the velocity is actually going up, and its thing is going up, and because of that, the in the end the velocity becomes positive. And if you wonder how much distance has this object traveled, you can actually do a like a integration of this velocity, and you integrate vt with respect to time. That is how much work of this velocity has done along the time. You will find that it's actually pretty visible for the eye. If you like basically shade these areas, you make a line vertical to this x-axis, you will find this total area of this surface from this positive axis minus this negative region. That's the total distance you have traveled. And this concept, basically this concept, velocity, acceleration, and the distance you travel actually have real ramifications or impact on stock as well. If you imagine, say, this thing is a velocity of the price movement, if the speed is with negative, that means fuck, your stock is actually is sort of declining in value, which is bad. But if you have a positive acceleration, then that means in the end, the direction of moving of your stock can move up. That means with respect to time, well, although this here up to 4 seconds, that in stock analogy, that may be 4 days. Although your stock is declining in value, but if you wait a few days longer, the the price movement will again turn positive and kind of make up for the previous losses in the end. The declined part will regrow in the end as long as you are sure that this acceleration is positive, so that, yeah, the dynamics is quite important. But the other question is, how can this be? How can we find a way to properly know that what is the price, what is this velocity, and this like acceleration for stock prices? Let's deep further. Let's go to my blog. So you already know there are two famous indicators, KDJ and MACD. But also you should be aware there are hundreds of thousands of technical indicators out there. So the best way to understand them is not to memorizing how they are calculated or their formulas are, but actually to understand the principles behind it, so that firstly, you see that you immediately know what this formula is up to. And secondly, you can create your own formula tailored for your own circumstances, for your own needs. And with this philosophy, let's go back to KDJ indicators and MACD. So, okay, KDJ in here, I wrote KDJ indicator is a stochastic oscillator that measures the relationship between the current price and its high-low range over a certain period. The three lines involved in KDJ, K, D, and J is an extension of basic stochastic oscillator with an additional J line to increase sensitivity. The formulas are, okay, so firstly, we define a approximate of price value, that is SV, named RSV, which is how it's calculated using the latest close price of today minus LLV. What the hell is LLV? It's actually the lowest low, HHV is high, and1 is a parameter. So basically it says today's close price minus n days, lowest price among these n1 days, divided by highest high minus lowest low in recent n1 days. What does that mean? It means that HHV minus HHV now, and there's a total difference between the recent high and recent low. And we kind of measure against this huge gap to see how much of a percentage we have grown or declined in this recent price movement. So it's a relative stock price thing. And it's relative always for a reason. If you are familiar with machine learning or statistic, it's kind of standardization, because the unit can be quite varied. A Apple stock can be 200 or 300 euros, but some famous stocks could be as high as 1,000. So if you were to compare different stocks and you want your signals to be consistent with one set of parameters across these different stocks that can be varied, have price varied as low as $1 or $2 and as high as a couple $1,000, you need to be standardize them. You standardize by make the signal adjust to the stock's own price movement, so it cancels out its kind of own size. So having defined RSV, we know it's a value between 0 and 100. 100 RSV means lucky. Your close price is basically the highest high in recent one days. And 0 means you are at your lowest low in your recent stock prices. So 50 RSV probably means you are in your medium point with respect to your recent price movement, and therefore you define two other things, K and D. A K is a moving average of RSV among the recent 2 days, and D is your K, interestingly, is your K among these N3 days. So what is that exactly? So in physics, sometimes you also have to do kind of approximation. Hey, RSV is definitely good, but RSV only represents kind of for the stock price for today at the very best. But this stock price can be volatile. You need to moving average to smooth out these stock movement to the recent N1 days, and typically N2 take the value of 3. We smooth out by 3 so that um, you calculate 3 RSVs and average them out so that you get a more robust calculation of this relative price. Of course, the robust here is always relative. You know, in stock, nothing is pretty accurate. It's discrete set of prices and indicators. So what you do is at its best, that's just approximation of, and I'm pretty sure there'll be better indicators than KDJ using more advanced mathematics or even calculus or even stochastic like a GDE, partial differential equation. They are all possible, but let's talk about basics, the ideas behind these basic indicators. So after having discussed K, what is D then? D is a further average, moving average behind this K. This actually it's kind of roughly equates to the smooth average of this stock price. It's actually, if you familiar with calculus, you know the calculus, the differentiation. You sometimes holy the differential. Let me find you a examples. Maybe you have a delta. Unfortunately, you do not. Let me type it right here. So sometimes it's supposedly your delta is like this. So suppose K is your latest K, or let's say, which is really bad. I wish there could be a simple explanation for you. Let's say, well, let's refresh. Firstly, the K is the latest stock price, which is kind of equivalent to the distance we are right now, right? And the average version of the distance, meaning you can equate that as a step behind, like the previous step. You do a delta, then you get a delta. Delta meaning the derivative is created actually by difference delta of distance divided by delta of time. Assuming the time, delta of time equates to 1, then basically you arrive at this J, 3K minus 2D. That's essentially a delta of distance, that is delta of price movement divided by delta of time, which is 1 day. Then you get the J, which is the time of this, which is the velocity of the stock price movement. And you also, J is a more aggressive line. That is the speed, of course. K is the speed. D is the lagged speed, which is the previous step of D. And traditionally, KDJ signal, D above 70, market overbought. D is the lagged price. So if the stock price normal K is 0 to 100, then D lagged D is also is already above 70. Then it's pretty strong signal. D below 30, average velocity below 30, pretty low in momentum, of course. K crosses D, you can think of J equals greater than zero, and that's essentially J equals zero, that's J greater than zero. That means you have a positive acceleration. And if you notice here, a positive acceleration means even if your velocity is your like your price, your the price movement may be negative, you're still declining, but in the future it will still going up and make up for it in the future. That is when your price movement is going down. If your price is already going up, a constant acceleration means it's going even further. It's just not gonna stop, and it's going to more and more aggressive. So back to stock, that's a pretty positive sign, right? So that's a strong buying signal. So if you do the reverse, if you find your acceleration is below, then it's pretty bad. So what about divergence? Well, if the price make a new high and low, actually this doesn't mean anything to us as of now because we don't get any signals of the velocity and acceleration. K and D doesn't. Well, K and D doesn't indicate a high or low signal. Well, K and D essentially are the speed and lag speed. So if the price reaches a high or low, while the speed doesn't indicate, that probably means acceleration is also fluctuating and doesn't giving us too strong of a signal. When the price make a trend reversal, basically a trend reversal, meaning, well, I think what here was trying to say is a price reaching a high low. I think yeah, it's repeated. It means reaches a high low. It basically means supposedly in the past, you probably due to some reason you have maybe a positive and negative acceleration, but since then your velocity doesn't show any strong characteristics. It doesn't go strongly up or down. Then probably that's also an indication of your acceleration is going up because you look at the chart here, if it's doing great, then your velocity will go all the way up or all the way down. So if that's not strong enough, fuck these translators. Then probably doesn't mean anything. Also, I wrote this physics analogy already. I kind of said it akin to rate of change. D is a smooth version of K. K minus D is analogous to velocity. Well, let's let's take this take an example to see maybe I can think of Tesla. Tesla recently, Trump just won the presidency, and Elon Musk was a big supporter, and will be a beneficiary of Trump win. So naturally, like this Tesla will be benefited. So if you look at the chart, we have K, D, and J. J is in pink. KD, it's a mess. I think it's for some reason this charting software is not doing too great. It's too mess. Let's say intraday. But I do not like intraday KD that much because KD typically in our explanation, it's more related to daily change, right? If you make it into minutes graph, it doesn't seem to make sense. I would prefer KD to be like this. You can see, wow, it's especially 5 day, 5 or 1 week. But for some reason, I don't list charting software. Let's bring KDJ back. For some reason, don't want to see MA that much. For some reason, it's K, D, and J are crazy because Tesla itself are crazy. So that's all I can say. You can definitely find some other less crazy stocks, I suppose. So all are going up, let's say Boeing, BA. Don't you have a stock that is in decline? Pretty sure there will be. Where is KDJ then? A and D and J. I think it's more charting software probably. It's showing a whole lot of mess. But anyway, you get the feeling in at any time that there are times that J is less, let's say here, I think. So if your stock is going through a decline, let's say how it plays out recently here, so because KDJ is also a bit of a lag momentum, you can slowly see firstly it's all the way downwards. I'm pretty sure that K and D will be down first, and indeed all the way going down, and the K goes down quicker than D, and J is more sensitive. J because that's a velocity. K, D are still stock prices, relative stock prices. J is going really quick. Say here, this is not so obvious, but some cases J is pretty sensitive. Say 15, 12, 1, that's going downhill. This is more obvious. 46, 67, and 4. That means J already basically tells you're basically going zero velocity. That's zero is not bad enough. If you go turn negative, go into negative territory, then you are doomed. But here's gradually K and D will go to zero or negative, perhaps, and J immediately turns negative. You know what will become. So if you are trading using technical signal, it's wrong time to sell, or you wait further and buy the dip. In retrospect, you should buy the dip from here, but it's kind of hard to tell. That is why you need all these analyses. K stock is poor, lagged stock price is also poor, but also you notice sometimes can be misleading because you have to treat the signal comprehensively. Do not trust a single signal because they have noises from the data itself. Say here, it seems all good, as if the stock can bounce back, but further surprise. Until then, here, okay, I think it's no more surprises. J bounces back more and more. Wow, it even reaches a level 100 sometimes and going up. I think this is a pretty decent example of up and downs with KDJ. Later, I'll also using Boeing stock as a MACD example. So basically, J is still speed. If I said K and D are velocity, then I said it wrong because MACD is actually the velocity. It's kind of acceleration. And you see, their calculation is slightly different for historical reasons. Firstly, they do a diff. What is diff? EMA, exponential moving average, which is in some ways a better moving average of a close price, and it uses short-term close price minus long-term pro price, which is also a approximation of the velocity. DEA is further it's a smoothed version of diff. It's also just like the way we've seen before. It's smoothed version of diff. That's also a lagged velocity. You make a difference times two because you are primarily care about the trend, so you don't care too much about the absolutely correctness of this velocity. So you get the feeling it's absolutely related to or at least proportional to the acceleration up to a coefficient. You can times what coefficient or add a bias term however you want, but it's actually absolutely related to these. These you can at the very least say it's linearly related to this variable of acceleration. So that's the way you should look at a MACD. It's not that complex. If somebody say, "Oh, it's complicated," there's a concrete formula. You should look at diff and dev. Fuck them. You should always think about this MACD with respect to the physics price dynamics of the stock price. Diff is the velocity. DA is the smooth velocity. You minus it, then you get the acceleration. Acceleration determines the further velocity and the potential of this price movement in the end. Let's go back. Well, because we already been through KDJ, MACD is going to be easier. Diff is going to be the short-term velocity. DA is a lagged velocity. Make a diff, you get MACD. So a lot of times, I think this normal red is diff, blue is the DA, lagged velocity. It's always lagged a bit because it's slower smoothed out. You make a difference, and what I love about MACD will actually visualize up and down. Well, green means positive, red and downwards means negative, and they printed out these little mountains of MACD line. So it means if it turns, especially when it turns positive and negative, it can have a serious correlation. So here, say it's a marked of the sharp decline, and actually you see it's roughly corresponds to the MACD turns negative, and here it goes a huge negative, but in between there are still positive, so there'll be rebounds in between, rebounds negative. What we primarily care is also this sharp decline. Can we capture that? Yes, indeed. KDJ was negative as hell. Negative as hell. You see that? Of course, there will be slight in between, a little rebound, also negative as hell, negative, little rebound, and negative in between. And here there's a sharp red, sharp positive MACD. If you care also about the velocity, look at the J. J is 87, 89. In between this negative region, J is also small or negative. But if you are not so sure because it's small or negative, then you definitely should worry about KDJ because that's also indicate the momentum. If the J is small, the momentum, the MACD, the momentum is turns negative, it means firstly, velocity is small. Secondly, acceleration is negative. Then it's fucked. If you are here, it's probably sell and wait for further confirmation. If you wait here, then you see the J picks up, the MACD goes big green and up, then probably it's a time to buy the dip because at least from a momentum perspective, regardless of the fundamental behind the stock, regardless of fundamental, you know the sentiment. You don't care about sentiment. From the price, the action, volume, the KDJ per se, people are buying in, or at least people behind this trade have confidence. Unless it's a play triggered by automatic algorithm who have no feelings or no beliefs. They are only executing their like programs. Then you can say your signal is completely disturbed. So again, there's no signals panacea for any kind of perfect trading. You still have to take any signal or any so-called perfect system as a grain of salt. There's no such a perfect thing. So, but again, these signals are pretty strong telling indicator for any kind of a trade. So you should be familiarized with these two signals. And you know KDJ, J is basically the velocity, MACD is basically the acceleration. With these two in your mind, you should be better equipped to trade at the very least. So that is hopefully that's the takeaway of today's and takeaway from my blog. Although it's verbose, but the gist of it is all in the chart and in this video. You should also bring this take-home message. KDJ is actually all about the price velocity, and MACD is all about the price acceleration. with velocity and acceleration. In physics, you can calculate the future price, future moving distance. In the stock, you should, in theory, be able to calculate the future price movement. But because the complex nature and the randomness nature in stock movement, any random factors could occur. And because the signals are a crude approximation based on previous data, even if the data is accurate. Yeah, because the formulas we take, because the approximation we take, because of the signals contain noise, you will be always be error. So that this calculation, this signal is imperfect at its best. So nice that we can visualize it and see on a fancy software, but we still need to proceed with caution. That's applied to every trading. You should proceed with caution, even if you have a perfect system, or you say myself it's perfect discipline, or you have infinite amount of money to lose. You still proceed with caution. That is also the other takeaway. Well, thank you. That is the gist of this course. If you love, of course, consider subscribe or click the like button. Although it's beginning of this channel, if you have more likes sent to me, I'm really motivated to make more high quality videos for self-education purposes, but also to educate people like you to better at trading. So yeah, that's it. Thanks.